Good morning, ladies and gentlemen, and welcome to the Board Finance and Audit Committee meeting for the California High-Speed Rail Authority for July 15th, 2021. Thank you all for joining us from across the state, and welcome to my colleagues, Vice Chair Nancy Miller, Directors Jim Gilmetti and Ernie Camacho. So the record will show that we have a full house and an agenda for today's meeting. So with that, we will start with our public comment, and I'm going to turn it over to our Secretary Mo. If you would advise the people who are listening or watching us what they need to do to address the committee this morning.
Thank you, Mr. Chairman. Good morning, all. Welcome to the California High-Speed Rail Finance and Audit Committee meeting. Today, we are hosting this meeting remotely via Zoom. In a moment, we will take public comment. First, we want to run through some important technical aspects of this meeting for offering public comment. If you are logged into this meeting via the Zoom application, please use the raise your hand feature typically located at the bottom of your screen so that I may call on you to provide your comment. If you're dialing in by phone, pressing #2 will raise your hand and put you into our queue. Speakers will be called in the order that their hand is raised. Once you've been in the queue and your name is called, in the web meeting, please click on the prompt on your screen to allow your microphone to be unmuted. On the phone, we will call on you by the last 4 digits of your phone number. At that point, you'll hear a message that you are being unmuted. Once unmuted, it will be your turn to speak. Please slowly and clearly say and spell your first and last name, and if applicable, state the organization you represent. After your introduction, each speaker is allotted 2 minutes to provide their comment. I will interject at 1 minute and 45 seconds to provide a 15-second warning. Our court reporter is on the line to record these comments. If they need you to spell or repeat something, they may interject. At the end of your comment, we will disable your microphone. However, you are welcome to stay on the line to continue watching or listening to the meeting. If you do not wish to provide comment and simply want to watch this meeting, you can do so by logging on to hsr.ca.gov and looking for the link to our live stream. Mr. Chairman, we have first up for public comment, David Schwegel.
Good morning, Mr. Schwegel, and welcome.
Good morning. Can you hear me?
We hear you well, thank you.
Great. David, D-A-V-I-D, Schwegel, S-C-H-W-E-G-E-L, U.S. High-Speed Rail, circling back after a great meeting with Sam Schwartz Consulting on turning California's transportation Titanic around by the 2028 Olympics, and Linda Pounce Realty on reimagining real estate in Fresno with phases 1 and 2 fully operational. It would be great if the authority could issue an RFP soliciting insight from stakeholders, thought leaders, consultants worldwide on how to get phases 1 and 2 fully operational by the time our nation welcomes back the Summer Olympics for the first time in 32 years, and upload these proposals to the website for all to see. Benefits of such bold visionary thinking and action would include a state legislature enthusiastic about allocating funds, tech firms worldwide overjoyed about the investment opportunity, and expanded breadth and depth among the consultants of the world, such as the Sam Schwartz of the world, and out-of-state congressional representatives such as Seth Moulton, Alexandria Ocasio-Cortez, and Marilyn Strickland, fully committed to this grand challenge of national significance. Perhaps themes will emerge of all participants in this all-hands-on-deck effort, being the Carrie Struggs of the world and doing that final vault under excruciating pain so that Team USA can bring home the gold. Or a third party building Merced to Sacramento and Stockton to San Jose ASAP for the expedited infusion of ridership revenue. Let's remember that California was not built by wimps and failure is not an option. Let's be bold and let's deliver phases 1 and 2 in time for the Olympics in 2028. Thank you.
Thank you, Mr. Schwegel.
Mr. Chairman, I'm going to briefly go over the instructions one more time because we did have a few attendees join after instructions were given. Attendees who would like to provide public comment using the Zoom application, please use the raise your hand feature, typically located at the bottom of your screen, so that I can call on you to provide your comment. If you're dialing in by phone, pressing #2 will raise your hand and put you into our queue. Speakers will be called in the order that their hand is raised. Mr. Chairman, none of the attendees after the instructions have been given have raised their hands.
All right, thank you, Mo. We'll move forward then with our agenda. And again, thank those who are with us for joining us today. I have nothing under agenda item number 2, unless any of my colleagues have anything that they would like to address or mention in item number 2. Okay, seeing none, let's move on into the agenda. And item 3 is our executive summary from our Chief Financial Officer, Brian Annis. Brian, good morning.
Good morning, Mr. Chair and members. I'll be briefing, as always, off the financial reports executive summary, which we'll pull up. So the first page on this, we start with reporting our accounts payable, aging, and disputes report. That's the top chart. No significant changes here. There were no late payment penalties incurred in the reporting month of May. So we've had a 52-month streak of no late payments. No aged invoices either in the May reporting period. Our invoices that are under dispute remain fairly level month over month, about $58.7 million.
Brian, with regards to those disputed invoices and when there is a resolution on them, I don't think that we've ever been given an update on what the resolutions are. They've been resolved. Is it reasonable to assume that if we are not being provided with an update as they're being resolved, that they were resolved at the level that of the invoice that was presented to the authority for payment, or was there a negotiation and a reduction, or alternatively an increase in the invoice or invoices?
Yeah, typically, I was looking maybe as an easier case. You see there's a couple that were added this month, Perkins, Coe, and Wong Harris. So, those are relatively small amounts, but typically the invoice would be resolved either by the contractor submitting additional justification that satisfies the project manager that was an appropriate invoiced amount, or else the authority going back and indicating that it was not, and the contractor agreeing that was not appropriately calculated or charged, and reduce the amount. So that's typically how that works. As the committee knows, a large number of these are related to the design build contractor for 2-3. And what they had done is submitted a number of invoices that are based on change order work that has not been implemented, in terms of there's not a executed change order on that work, and that's inappropriate. They need to have an agreed change order in order to bill on work beyond the scope of the current contract. So in that case, there has been some resolution, but it's primarily been technical, where we found they submitted the same work over a couple months. And so we removed the duplication of some of that again, duplicative invoice work. So for the remaining work in that CP23 category, those will be resolved either whether a change order is agreed to and executed, and then the work that they bill that they might have performed at risk, we could go ahead and pay that invoiced amount if it's legitimately work that's been performed. The other option is if there's a dispute on whether that would be work under current contract scope, then that would be resolved either way, either the authority determining that is in current contract scope, or an agreement with the contractor that what they have billed is, not a separate change order scope addition, but would be, current contract scope item.
Okay, that's even more of an explanation. And you mentioned something that I heard, and I want to just follow up on. It's also then clear from what you said that that the authority is not paying work or paying for change orders that until the work has been completed and approved by the authority. Is that accurate?
That's correct.
Okay, and
Mr. Chairman?
that's in all cases.
That's correct. Yeah, and again, that I mentioned that the scenario where sometimes workers do perform work at risk.
Right, at risk.
So then, when the change order is executed, we would pay for that work that has been performed at risk. So that would not be an advance payment. That would be, work that now is eligible for payment.
Okay, great. Thank you, Brian.
Yeah, Mr. Chairman,
Yes, please, Ernie.
on that same question, are we accruing dollars to be prepared for that work that is being done at risk?
We do. That is something we do track. Actually, when we get to it later, I think I have some examples of that a little later in this agenda. But we do look as part of the year-end close exercise. We do look for any accrued obligations that the authority may have, whether it's a certainty or a risk. We do that as part of the year-end accounting process.
But how do we count for month to month?
I'm happy to look further into that. I think the contract managers, in working with the contractor, should have awareness certainly of what activity the contractor is doing in the field, the status of change orders, if there's any work against a change order that's still in a negotiated status.
Mr. Chairman, one of the things that we've forgotten, maybe it's a point of order, but I don't know that we actually approved the minutes going back to.
We did.
I never heard that.
No, you're correct, and I jumped right over it. So let me just make sure, Brian, was that the end of your answer on that?
Yes.
Okay, and if the members would agree, I apologize for not addressing that item, which is, I think, the first item on our agenda, the consideration of the May 20 minutes. And if, with your permission, if we could go ahead and act on that and interrupt Brian just for a moment, unless there are any changes for the May 20 committee meeting minutes, can we have a motion for approval?
Before we have a motion, can I just ask one question of Brian?
Sure.
Brian, going back to the finance and audit cash management report, going back to May of 20, it stated that we had nearly $2 billion in cash in hand as of May of 21. Is that a correct number?
Yeah. Are you looking at page 2 of the executive summary cash management report? Where I've seen the three cash resources, Prop 1A at 184 million, cap and trade at a 1,746,000, and property fund at.
Well, this will be going back to the May 21 finance and cash audit report. Since we're going to be approving, I just had a question on that. And just because I think it stated that we had approximately $2 billion cash in hand. And I just wanted to validate that.
Yeah. Again, this page that's displayed now at the bottom table on the right side there. Yeah, the sum of those three funding sources, which look like a little bit less than 2 billion. Those would represent our cash balances.
And then we're still expecting the cap and trade in the normal amount to start to begin to be somewhere in the $500 to perhaps $700 million range going forward. Is that? I think we're coming out of this COVID, so we should be able to anticipate some of those funds coming in, correct?
That's correct.
That's all I wanted to ask. Thank you.
All right, thank you, Ernie. All right, with that, if there are no other questions or comments, do we have a motion for approval of the May 20th committee meeting?
moved.
minutes?
Second.
Motion and second by Jim. Motion by Ernie. All in favor?
Aye.
Thank you, everyone. Passed unanimously. And I'm sorry for the interruption, Brian, but now back to your report, please.
Sure. We could go back to the PowerPoint. So a couple updates on the cash side. As we just mentioned, the Prop 1A bond fund ending cash balance, 184 million at the end of May. We'll mention since the committees last met, there was a bond sale that occurred in April. The Prop 1A cash balance at the end of March was about $50 million. So the treasurer did sell another 140 million or so of Prop 1A bonds. Where we do have Prop 1A balances remaining, it's for the bookend projects and state administration. So primarily the funds that are sold now will likely go to the Caltrain electrification project, which is, in construction now of that electrification element. And then also our state operations budget. So that is up about 140 million from last month's report. Cap and trade balance, the 1.7 billion, that includes the February auction, but we do always wait until we have authority to spend before we include a recent auction in the cash balance. So we do still wait for the Department of Finance and the controller to finish their work to assign us the proceeds from the May auction. And lastly, the rail property fund, that is up a tad at $10.7 million. As was mentioned, the cap and trade has been more positive, and in fact, the May auction was a record setter for us. We expect to receive more proceeds from that May auction than we've received of any prior auction. It's estimated to be about 229 million coming to the authority. The prior high we received was about, I believe, 215 million. So that's higher. It's higher for a couple reasons. One is there's more allowances being sold due to the resale or the secondary offering of some of these credits that went unsold last year due to COVID. That higher allowance offering will continue for the August auction and also the the November auction. So, all else being equal, those next two auctions may be better than average as well. The other component of proceeds is the auction price. And during the May auction, the settlement price based on the auction bids came in about $1.10 above the floor price. So those two together led to that higher auction proceed for the authority.
So does that mean then, Brian, I think what you're saying is after the next two auctions, the expectation is that previously unsold credits will have been absorbed?
That's correct. Yeah, if they do sell out during the next two auctions, then by the time we get to the February of 2022 auction, the number of allowances may fall a bit, and therefore our revenues may fall a bit as well. But again, there's also the aspect of the settlement price for every auction, and it does seem on a trend that settlement prices have been growing as well over the last couple auctions. So it's always hard to know all these factors together are going to produce specific numbers. So that's why we tend to talk about it in the range that Director Camacho had mentioned, 500 million to 750 million a year.
Okay, thank you.
Sure. Next slide. So this is our report on our administrative budget, which is 73 million for the fiscal year. The second line shows monthly expenditures, and you might note there's quite an increase from April to May, Our April expenditure was 3.7 million and our May expenditure is 6.1 million. The primary reason for that change, and it's a note at the bottom of this page, is we accrued a reimbursement expected from Caltrans of 1.9 million. And that's because we're cooperatively developing a update to the rail model. Caltrans has responsibilities for a statewide rail plan every 5 years. And, for consistency and really to be able to pool our resources for a robust model that can give the best estimate of ridership. We are coordinating with Caltrans, and they're funding part of the upgrade of the rail model that's managed through the ETO contract. And so we, again, accrued those dollars, and that's a reimbursement that we expect will come in from Caltrans.
Brian, does that mean then that we'll be able to utilize that model for our simulations as opposed to what we've done in the past, because the model that's being done will be appropriately accurate for modeling for high-speed rail ridership also?
Yes, and we have in the past used two different models. There was a model developed specifically for high-speed rail, and we have what's currently used as the state rail model that's better at measuring shorter distances, commuter, intercity passenger service, or more traditional Amtrak service. But having a single model that includes both factors, if you will allow more robust modeling of transfers among the different systems, and also just updates of different inputs that influence the ridership assumptions, population, economy, all those type of things. So that's a product being worked on that'll finish toward the end of the year, early next year.
Okay, thank you.
The other thing we report here is the authorities' filled positions and vacancies. We have currently about 269 positions filled out of our total authorized of 356 positions. We did start the year with a much higher vacancy rate due to a number of new state positions added in last year's budget, 85 total. And we have been hiring at the pace of about 7 positions a month, and over 2 years have hired actually about 207 vacant positions have been filled. But because, some of those are filled with current incumbents that are promoted or transferred, we don't show the net at the full 207, but progress continues with the vacancy rate falling from 37% to 24% through May. I believe we can move on to the next slide if there's no questions. This slide has similar information on the top showing the filled state positions by fiscal year, just showing a bit of the progress from 185 filled state positions in 18-19 to 269 positions through May. We also show here the rail delivery partner staffing measured in full-time equivalent positions. And again, just showing the trends here that the RDP staff has been being reduced while the state staff has been augmented. And that's part of a multi-year effort we called Form to Function, where we looked at all positions, state and consult filled positions, to determine what was the best way to accomplish that workload with state staff or consultant resources. And we tend to, pursuant to the direction of state law, where we have a role that can be performed by state staff, we do fill it with state staff. Where it's a specialized skill or a temporary or occasional workload, then that's where it's appropriate to fill with consultant staff. Next slide. So this slide is our capital outlay budget summary for the month of May. The May total capital outlay expenditures on toward the top right of the table at the top, 76.3 million, which is about the same as the April expenditures, which was 78 million. down from the prior year for May, which was 107 million. We break it down into the individual design build construction packages. About the third bullet down totaled about 48 million. That included a little shy of 20 million for CP1, 19 million for 2-3, and about 9 million for CP4. The other components that make up this cost, when things like right-of-way is added, project management contracts, third-party contracts, etc. The total was 63.3 million for the month. And then that remaining 13 million or so would be work outside the Central Valley, such as the environmental work and any reimbursements to our partner projects like the Caltrain project. Expenditures for the year at the bottom table, you'll see through May, a bit over $1 billion. At the end of this presentation, we do provide the preliminary numbers for the month of June, and we expect about 175 million of expenditures in June, which would get our total capital expenditure for the year to about 1.2 billion. If there's no questions, I can move on to the next slide. This is our tally of total project expenditures since 2006, about $8.4 billion. And this shows the amount by category. At the bottom, we show the current status of the federal ARA grant match. Again, in the last 6 months or so, the federal government has approved the majority of our submitted invoices. So we have almost 2.2 billion of approved match out of our total of 2.5 billion. And so we have approximately 350 million remaining for FRA approval. And we do expect in the short term to hear back from FRA and hopefully receive approval of most of that remaining amount. We'll mention here on the right column here, you'll note we have submitted a bit more than our requirement. About 100.7% of our required match has been submitted. So we've over-submitted a bit. And the reason for that is we do from time to time through audit or other measure have a refund situation. You may recall that Paula Rivera had shared an audit where there was an audit of some overhead charges by some of the subcontractors of the primes that resulted in some determination of a refund due to us. And so where that sometimes is applicable to the federal ARA grant or the match requirements. So there are some adjustments over time due to audit or other issues. So we're a bit overmatched here to accommodate those type of issues that may occur in the future.
Brian, does this include the 949 million that will be allocated back to us based on the ARA agreement?
Oh, I think you're referring to the we call the fiscal year 10 funds
Yes.
per the settlement. This does not. No. So we have not received any reimbursements based on that grant yet.
Okay.
One thing to mention on timing for that, there was an agreement with the federal government that for the ARA program, the reimbursement was front-loaded, if you will, and our reimbursement occurred later. That was done to accommodate the project, but also the tight federal deadline that the ARA funds had to be fully expended by 2017. And part of that agreement was the FY10 federal funds worked the opposite. So while ARA was kind of the first in, if you will, the federal 10 funds are anticipated to be more the last in per agreement. So we expect those funds to start flowing probably in 2024 as we're working through the track and systems construction. And that would be the primary use of those funds.
So it was money that was just reallocated back to us.
Correct.
And it'll be spent in the future.
Correct.
Thank you.
Next slide, please. Contracts and expenditure report. Here you note our number of contracts went up by 4 to 207. The value of contracts went up by about 8 million. On our small business utilization rate reporting, that was fairly similar or flat month over month, 22.3% as of May for small business utilization. And the last bullet here again summarizes our total number of businesses working on the project in different categories: 221 small business, 200 disadvantaged business enterprises, and 68 certified disadvantaged veteran business enterprises. Next slide. Contingency reporting. This report summarizes that in the month of May, there was 38 million of contingency use. None of that, no individual change order exceeded 25 million. For the most part, this fell into 3 categories. There was a 9.7 million of contingency directed to right-of-way and CP1. There was a 15.5 million use of contingency for the project construction manager on CP23 Arcadis. And there was a 10.9 million contingency use for right-of-way on CP4. And there were a couple other smaller numbers for design build contracts as well. But the bulk of these, again, were the 2 right-of-way elements and the Arcadis contract for CP23.
What is that, the cost for Arcadis again? I'm sorry. And what is that for? Is that for the CM portion of the work that they're doing?
That's correct. Yeah. So of course, the construction manager contract, working through reviewing a lot of the final design work and that type of change orders, things of that nature. So yeah, that's an augmentation to the PCM contract, Arcadis.
Do those approvals or those those invoices go before the Business Oversight Committee and approved at that level and just reported out to us?
That's correct.
Mr. Chairman, I had a question about that only because we have the delegation of authority at 25 million. Some of these change orders coming on the CM side are exceeding that 25 million and being approved at the Business Oversight Committee and just being reported out to us. And there just seems to be some inconsistency in the language in terms of delegation of authority, in terms of the amount.
If I could just on that, just one clarification. This was a 15.5 million on these PCMs. If it did exceed 25 million, I believe that would, under delegation, we'd report that to the chair.
Yeah, I think that's right, Ernie. I think that's part of what you're having discussions on also. So I think that the point's well made and the concern. And I assume that we'll be seeing the results of some of your conversations with the CEO and the CFO at the board level, probably in the next month or two.
And just for the benefit of our other committee members, is that some of the CM contracts, they're change orders because they're running out of money because we've extended time. And some of those change orders could be $50-60 million to complete a 2-year plan. So I just wanted to be sure that the board was made aware of those change orders so that when we see money being expended and we're running out of money, then we at least will understand where the money went. And so we won't be surprised by a big number coming back to us in the future.
Yep. Thanks, Ernie.
Thank you.
Go ahead, Brian.
All right. And I believe I only have one more slide.
Yeah.
You can go back to. All right. So this is our preliminary look at the June numbers. In terms of the construction work, you'll note increases month over month in all of the CP packages, both on the design builder side and on the other CP components as well. So the DB related expenditures coming in about 63 million for the month of June. Total CP, including the DB, at about 99 million. And other expenditures outside of the CPs is that a difference there of about 77 million. That does include primarily the largest is the Caltrain. And Caltrain, we reimburse them for their electrification work, but they don't tend to bill us monthly. So that's an area where at the end of the year, we do work with them to estimate what they'll ultimately bill us for work in the fiscal year. And so we accrued $40 million from Caltrain in that amount, as well as similar process for some of the regional consultants doing the environmental work that don't always bill us monthly. So that other capital category outside the CP work is up primarily here due to year-end matters of June being the last month of the fiscal year. But ultimately, yeah, we expect that the 176 million will be billed to us for work in the fiscal year and attributed to June.
Brian, on the Caltrain's work, I understand there may be some cost overruns. Who's responsible for the cost overruns on that project?
Well, our agreement with them, we do have only our current funding commitment to that project, which is the 600 million of Prop 1A and 113 million of cap and trade. So in the agreement, we don't have any obligation to fund any higher costs that would fall on the local entities. I will mention that part of the governor's May revision includes some additional funding for transit outside the high-speed rail's budget. And that could be a source that Caltrain could apply for to fill any gap they have. But yeah, we would not anticipate any additional expenditures out of high-speed rail funding for any funding gap there.
So what you're saying is we're capped.
Yes.
Thank you.
Thanks, Jim. Anything else, Brian?
No, just quickly that at the bottom there, no changes to the ARA match from May to June to report, and we'd filled another 8 or so vacant positions through June, and so that vacancy rate dropped a bit. But that concludes the report. Thank you.
Thank you, Brian. Any questions for Brian? All right, seeing none. Brian, thank you for the report, and as usual, great job. Thank you.
Thank you.
We're going to move on to item number 10, which is
Mr. Chairman, you're muted.
Tom, you're muted.
all right, Brian, I apologize for that. I just was saying thank you very much for the report, and good job as usual. With regards to item number 10, moving on to the Central Valley status report, Daniel Horgan is going to take us through that today.
Good morning, F&A committee members. Okay, we'll try to make this as succinct as possible. We'll look at page 1 to 13. So if we could have the first slide, please. Okay, as Brian already said, the contractors' invoices for May were 48 million, which was 19.6 million for CP1, 19.4 million for CP23, and 9 million for CP4. And the early indications are for June, we're looking at approximately 63 million. So that is an increase, which is positive. In terms of change orders, in the month of May, we issued 1.4 million change orders. This was several small change orders in the coming months, we're going to be issuing much more significant change orders, and some of these will be reported in the main board meeting today by Brian Annis. Okay, contingency, as you can see, the risk contingency for cost baseline Rev 1 is down to 684 million, and that will continue to deplete in the coming months. In terms of design, as reported by Brian Kelly in 2 previous board meetings, design is substantially complete. CP4 fully completed. CP1 and CP2-3, we're down to the last few packages. We expect full design completion for all the structures and guideway by August. In terms of construction labor, slight increase from last month. We are now at 1,086 workers. That will also go up. The early indications for June is that we're at 1,100. And so that is moving in the right direction. Still not as high as we achieved last year. Okay, next slide, please. Okay, in terms of structures, in construction or complete, it is the same as last month. We anticipate in June adding another structure. In terms of guideway, we're at 82 miles in construction or completed. We also anticipate adding a few more miles of guideway. So pretty good progress with the structures and guideways. Utilities, this is really the big focus for us, and anybody who's driven through Fresno recently will see significant utility works. We got 30% of utilities completed. We got 25% in progress, and we got another 7% approved to start. But we still have almost 40% of utilities to do. Utilities are slow, cumbersome, but we are working our way through the utilities, and we have to do utility relocations before we can do the main construction work. So this is a priority for us and remains significant focus for the teams on site. Okay, real property. We've, under the leadership of Dennis Kim, we've started to achieve some really good handovers and parcels to the design builders. In the month of May, we handed over 30 parcels, which was absolutely really good. Preliminary figures for June also indicate we've got 30 parcels, which is excellent. July, at the moment, we're predicting about 20 parcels. So this is good progress. But even with all this progress, we still have approximately 400 parcels of land. So land is going to continue to be an issue, and it's going to continue to be a major focus for the program going forward.
You know, at that rate, at 30 a month, we're not going to get to the end of the trail here. What's the plan to speed this up?
So Dennis Kim has reorganized the whole right-of-way department. He has split it into two functions. One function is project management, and the other functions are technical experts. So he's deployed an additional 6 to 8 project managers to focus, to continually track documentation, move it through the system as quickly as possible. So there is a plan, and I'm pretty sure Dennis Kim would be happy to do a presentation on that plan in the near future.
You know, when you tie that to utility relocations, all of this affects the construction schedule. And, you know, all we're seeing is like percentages of completion. But I don't know where we are on the construction schedule. Is it holding up a contractor? Are we going to have change orders based on delays? I can't see anything in this report about that.
It's a very valid point, Jim. And there are some areas where the contractors have worked. For example, we got numerous bridges where they're working on one abutment and they can't work on the second abutment because we haven't got the land. So the contractors have been flexible and they've been working around the non-availability of land, but it is still an issue. And we're doing everything possible to expedite the delivery of land.
I think we should be putting some dates in here, some targets that, so everyone's on the same page of what we have to do before we cause a contractor delay.
Absolutely. It's a great recommendation. We'll take that on board.
Thank you.
Thank you, Jim. Okay, let's move to third parties. Third party agreements, they're coming to a close. In the past year, there was 50 agreements finalized. The vast majority of those are supporting construction. And when we get to the details, we have some really good news on a third-party agreement that we just closed yesterday. So project development, which is the environmental clearance, as you should be aware, the Bakersfield to Palmdale environmental approval is coming to the board next month. This is really significant. This is 80 miles of guideway that's going to be fully environmentally cleared, which is a huge achievement. And we're on target to bring Los Angeles to Burbank section to the board for approval in November. So that will be another 10, 12 miles. So this is all very positive. All the other environmental approvals are on track. Next slide, please. Okay, we can go to the next one. Okay, so most of the report is based on revision 2. However, this projections is still on the old revision 1. So this needs to be updated for next month. And as you can see, this year our progress, we're increasing in terms of production. June is going to go up, July, August is going to keep increasing. But the production is still not as high as it was last year at the peak. So we're anticipating increased production over the coming 3 to 4 months. Next slide, please.
Mr. Horgan?
Yes.
This is Ernie Camacho. I'd like to go back to your previous slide for a second.
Of course.
On the CP construction underway, we specifically CP1, their original contract was about close to $1 billion, I think 900 and some odd million dollars. We've expended thus far close to $2 billion. Looking at the FRA agreement on page 50, we are projecting CP1 to cost us 3.6 billion, or 3.5 times more than the original contract. How are we anticipating paying that, and with what money?
So I will defer to Brian Annis for that. There is going to be an information presentation at the main board today about the cost baseline Rev 2.
Well, then I can wait for the answer to that at the board meeting, but I'll certainly ask that question again.
Okay, thanks, Ernie.
I can just interject just briefly. We have, as these costs for the CPs have increased over time, we have directed some of the cap and trade funds that have come in since 2012 for that purpose. And again, the Prop 1A request to the legislature now, that would really be the major funding source going forward to complete these design build contracts.
So the 4.2 billion that you're looking for on Prop 1A money is to pay for the overruns on the CP contracts?
That would, among other things, it would fund the completion of the CP contracts, the additional right-of-way that's been determined needed for the project, the other project management costs associated with the CPs, and also a portion would be directed to the environmental completion.
But if we were to exceed those numbers, since they don't have, they have not yet got a completion or termination contract amount sent to us, right now we're at over $2.4 billion over budget in terms of the just CP1. CP23, which is a larger contract, I would anticipate that they may have an equal amount that will exceed the 4.2 billion that we have coming from the legislature. I'm just wondering where we're going to get those and how we're going to contain those costs.
Sure. Well, again, the combination of Prop 1A and future cap and trade does provide sufficient revenues. If we have access to all those funding sources, would provide sufficient revenue for what we call the Rev 2 budget, which is what was included in the business plan.
Yeah, I think, Ernie, we
Yes.
went through this when we got the business plan. We knew the need for the Prop 1A funds, the 4 billion, in order to complete, and that included a track and systems bid as well. But the budget,
we don't have enough for track and systems, Nancy. Just on the money that we have obligated on the CPs, without that's just civil work. we will have expended all the 4.2 there. And
Well,
so
again,
it'll no way cover the tracking systems contract.
Again, in the budget of cap and trade, the flowing in at 500 million to 750 million a year. With those budget projections, both on the revenue and the cost side, we do have sufficient revenue for these budgeted amounts.
That's right. And that also includes our contingency. So I'm not sure. I know that we've gone over budget from the original budgets, definitely, but the staff has done a good
just
job.
on CP1 alone, we're 3.5 times greater than the original budget.
That's right, but we knew that we knew that was coming about a year ago. You know, we knew that there's change orders is kind of the how we're dealing with this problem of, and you know, it goes back to the ARA grant that we got, that we didn't have the utility or the right of way nailed down yet, or even the design. So
the ARA had nothing to do with it. That was completely separate. That was only unallocated. Now it's reallocated. We've not touched that. So
well, my only point, Ernie, is that we do have this budgeted in the business plan. And it does include cap and trade money that historically we have received. So we do have a balanced budget so far.
No, we don't have a balanced budget.
Well, I would disagree with you. Under the business plan,
that's fair.
I know you didn't vote for it, but under the business plan, we have a budget that shows sufficient revenues to complete what we have before us, including the tracking system.
We don't have our arms around what 2.3 is going to cost us. Brian, can you tell us what 2.3 is going to cost us in total?
You know, the underlying problem.
Try to find that.
is we've got a design build versus a design bid build.
Right.
That's what started the problem, because
Right.
a design build, you don't know what the hell the costs are going to be. And so all of a sudden it looks like you got a bunch of cost overruns.
That's right.
But if you did a design bid build, we would be close to wherever the budget would be. And that's the biggest problem we're faced with.
And
That's the perception that the public looks at, is they thought they had a fixed contract, but under a design build, it floats. And unfortunately, it floated up.
And Jim, you're exactly correct. And what has changed to a great extent with this project is change in scope. Scope that wasn't anticipated, as Jim, it's another way of putting it, that Jim has just defined. In addition to CP1, we added additional scope, which was additional miles moving forward from the 111 that were really initially contemplated. So it's a series of a number of things, but I think your explanation is absolutely correct with regards to the differences between design bid build and design build. And so what we're dealing with, what the public sees, is cost overruns, but there's a absolute definition between a cost overrun and change in scope. And
this is exactly what I was trying to put, is with a design bid build, we could have a defined budget.
Absolutely.
Where we're at. With a design build, we just don't know, and it continues to grow. So I'm just trying to alert my fellow board members that we may have continued cost overruns, if you will, or spending more money than we have.
I think that's a good point too, Ernie. I think that's also why we have heard in the last several months the importance of the completion of the design of the entire first 119 miles, which doesn't give us still the same comfort of his design bid build, but at least it's fully designed, and the contemplation of increases are better defined when the project itself has been designed. So it is a challenge. I do think that the business plan makes provision for what the expected costs are going to be, and of course the difference is the expected costs and what they actually are by design are to be incorporated in the risk and the risk dollars that are incorporated into the budget. So I think it's a great conversation. And as you point out too, Ernie, it's also appropriate. This is one that the entire board needs to also hear about. So I appreciate your bringing it up, and Jim and Nancy, if your comments with regards to just the general condition of things and the indications or implications of the two different types of approaches to providing for the costs, or at least the knowledge of the costs of a project. So with that, if there is nothing else on that for right now, Daniel, are you, if you could go ahead and continue
Yes.
with your report.
Absolutely. Next slide, please. Okay, this shows the contingency for cost baseline Rev 1. The drawdown, it was originally 2.6 billion. Now we're at 684 million, and we're projecting by the end of June to be at about 470 million. So it is drawing down quite quickly. Okay, next slide. Okay, this just shows the curve of construction labor. You can see last year we hit a peak in November of 1,174 construction workers. This year, we're probably on track to get close to that as well, where we've got a very good upward trend from the start of the year. We know June is going to be higher. We expect July and August to be higher as well. So this is a leading indicator of construction activity on site. Next slide, please. Okay, this just shows the guideway, the 82 miles. We're anticipating adding another 3 this month in June, which we did, and we're also going to add 1 more structure. So we are opening up more structures as we complete the utility relocations. Next slide, please. Okay, this is obviously the right of way. So as I explained earlier, we had 30 packages delivered, parcels delivered in May. Also, preliminary figures, we've got 30 done in June, which is all positive. But yes, there's a significant amount of work to be done here, and under Dennis Kem's leadership with the right of way team, he is putting a structure in place to expedite the delivery of land, but it is still an issue, and it is still going to take a significant amount of time to complete.
Daniel, why is CP4 so much better than 1, 2, and 3 in terms of right of way?
Yeah, CP4 is a much smaller contract. There's much less parcels, and CP4, we've learned a lot. CP4 was the last contract to be awarded as well, and the lessons learned from CP1 and CP23 were incorporated into that contract. So we were much more advanced in our preparations for that contract.
Thank you.
You're welcome, Jim. Okay, next slide, please. Okay, this is really the handover of the railroad parcels. There hasn't been an issue here. When we need parcels from the railroads, they provide them as and when required. So this has not been an issue. Next slide. This is the land conveyances. As you recall, for certain third-party utility companies like PG&E, SCE, FID, FMFCD, we need to convey land rights before they will undertake the relocations for us. This is a stringent requirement, but in the past year, we've developed a really good production team, and Dennis Kem again was pivotal to making this happen. So now we have a team in place that produce land conveyance rights ahead of when we need them. In addition to the 584 parcels done here, we have another 150 packages that are 90% complete, just waiting to get the title deeds of the land. So this is good. Next slide. Okay, so here I'm very happy to announce that yesterday the Semi-Tropic Board agreed to sign a contract with us. So this is absolutely key to the success of the CP4 contract. So this was one of the last really big problems we had in focusing on the completion of the CP4 contract. So this now opens up the opportunity for the completion of the CP4 works by next summer. So this was a significant win for the program. And again, this was led by our legal department, by Miss Bunbreak, and Dennis Kim. So a huge achievement for us. We've been working on the semi-tropic agreement for numerous months. So a huge achievement for the project here. So other agreements, Kings County agreement, which is the top of the page, that was to go to their Board of Supervisors the end of June. That's now been deferred until the end of July, but we do not anticipate a problem there. So the bulk, practically all third-party agreements are in place now, which again is a huge achievement, and it has taken a lot of effort. Okay, I think that.
Can I ask a question, Mr. Chair?
Sure, Nancy.
Did we hear back on the grant that we had done with the city of Wasco?
Yes, we did, Nancy. We didn't get that grant, but we have applied. We have, I think, Brian, we've already applied for another grant for that work.
That's correct. Yeah, we actually, in the full board meeting later today, we do have an update on that. So unfortunately, we did not win the infra grant, but we have already reapplied as of Monday of this week for that same scope of work under a federal program called RAISE, which we hope will be more competitive there. And we have a couple other grants we applied for. We'll outline at the full board meeting.
Okay, thanks.
Okay, that concludes the presentation, Tom.
All right. Thank you, Mr. Horgan. Any further questions for Mr. Horgan? All right. Well, thank you, Daniel, very much. And
Thank you.
You're welcome.
we'll move on then with that being the completion of our agenda for today's meeting. Do any of my colleagues have any comments you'd like to make before we move to adjourn this meeting? Hearing none, then we will see everyone at 11 o'clock this morning here, and invite all of you watching and or listening to join the board meeting, which will begin at 11 this morning. Thank you for attending today, and the Finance and Audit Committee is now adjourned.
Thank you.
Thank you.
Bye-bye. Bye,
Bye.
everybody.